Welcome to our Class 5 of ACCA F9 revision. And here is the class agenda for the 5th class, which we will review the question on the Payable, which we are dividing it into different parts that we will go through step by step. And also we will cover the objective test question on the working capital management. We selected 7 questions to discuss. So we will finish the working capital management discussion by the class today. And next we move on to risk management, which means the Forex and interest rate risk. We'll discuss about the mind map to refresh your memories, and also we'll discuss about the theories that in the risk management, and we'll go through one question into the class today. Because for the risk management, a lot of the questions will be in the section B, the case or the scenario-based objective test question, and some question in section A as well, in the objective test question. So we'll go through it step by step, and part of the question will be covered in next class. So let's start now. And here, the first question to be reviewed is the Payable, the first part, the part A. And here are the background information for the Payable. So you can read it first, and then you can come back to listen to our explanation and discussion. And this question, okay, the Payable is a quite, I think it's good example on cash operating cycle. Okay, it's a good example on the cash operating cycle, and I would like to make a start on this question because it's much better for you to understand well of the concepts or the theory behind this question, so that you can handle the similar question in future. Especially right now, ACCA is much more, or ACCA examiner teams prefer this type of questions a lot, because it can test the students their understanding about the whole working capital management concepts, instead of only, for example, only trade receivables or only the oil inventory. And the question here, the company right now is the middle of December 2026, and the company is looking at the working capital management for January next year. And here is the financial information at the start of January, which is the forecast financial information only. And the sales on credit, and they are expected to be 3.5 million in this year, and monthly sales are in breakdown as follow. For Payable, this company has gross profit margin of 40%, and it offers 30 days credit. In other words, the customer can enjoy 30 days credit. However, the customers, only 60% of them are paying in the month following purchase, while the remaining customers take an additional month for credit. So here, maybe about 60 days. The inventory is expected to be to increase by 52,250 in January. The company plans to pay 70% of trade payables in January, and defers the remaining 30% until the end of February. And the suppliers of the company require payment within 30 days. And credit purchases from supplier during January are expected to be 250,000. There's an interest cost. Okay, 70,000 is due to be paid in January on fixed rate bank debt. And operating cash is outflow, are expected to be 146,500. And Payable has no cash and relies on its overdraft to finance daily operations. And it has no plans to raise long-term finance during January. So assuming 360 days in a year, then the first part, you are required to work on the cash operating cycle for this company at the start of January 20 X7. Remember, here we are required to work on the cash operating cycle. It means that we need to show the answer in days. Okay, the cash operating cycle is about the number of days, And in the examiner comments, a lot of students, they are not working on days, they are working on money, on dollar. Why? Because they confused, they mix up two terms. The first is net working capital or net working capital investment. The other is cash operating cycle. Okay, for cash operating cycle, it's always in terms of days, in terms of number of days. So bear in mind when you are asked to calculate the cash operating cycle, is the number of days you have to work it, not the net working capital, not the dollar side. So we are required to work on the cash operating cycle. It means the number of receivable days, okay, the infinite number of inventory days or inventory turnover days, and the number of payable days. Okay, and some background information we need to work on is the sales given is 3.5 million per year. And how about the cost of sales or cost of goods sold? Okay, the information provided here is the gross profit margin at 40%. So in other words, 60% is going to the cost of sales. One minus 40%. So you can get the answer by just simple calculation is 2.1 million for cost of sales. So we have to get both sales figures and also the cost of sales figures to get the number of days in receivable and inventory and payable. For receivable days, right now, what's the balance at the start of January 20 X7? Okay, you can see that at the beginning of at the start of January, for the trade receivables is $408,350. And this number divided by 3.5 million times how many days? 360 days, right? 360 days. So for receivable days, it is 42 days. Okay, and for inventory days at the start of 20x7 is 455,000 divided by cost of sales or purchase. And here we get the cost of sales, which is 2.1 million. And it times 360 days. So the answer is 78 days for the inventory day. And the payable days, the payable balance is 186,700. divided by the purchase or cost of sales, which is 2.1 million times 360. So you just work the simple calculation here. You got 32 days. So the number here, 42 plus 78 minus 32. So the total or the cash operating cycle here (42 plus 78 minus 32), which is 88 days. All right. So let's make it clear. This question is asking you to work on the cash operating cycle. So it's about the number of days. Don't confuse with the net working capital. And because you are required to work on the number of days. So please work on step by step. First, you need to work on the receivable days based on the sales figures, because the sales all are credit sales. And next, when you work on the inventory days and payable days, you need to find out the cost of sales numbers here, okay, in order to finish your calculation.